I'm sure you've heard of the term growing pains. I like the term because it has a lot of positive connotations, but obviously it comes along with pain as well. One of the growing pains that any business struggles from or suffers is the need for funding or finance as you grow. You often find you need to look externally for ways to finance your business or your growth plans, and one of the ways in doing that is obviously to go to a bank and ask for funding. In this region, generally, there are two types of funding that you can access. One is Islamic finance and the other is conventional finance. Islamic finance is based on Sharia law or Islamic principles, where the bank would usually partner with you and not traditionally charge you things like interest, because that is considered haram under Islamic principles. So for example, you can probably finance a hotel business under Islamic finance, but if you were serving alcohol in the hotel or serving pork or certain items of tobacco, then perhaps the Islamic bank would not be that keen to finance you. So it comes with its own challenges. Let's talk about conventional finance for a minute. When you go to a bank and say you're this hotel and you're looking to either expand the hotel or you're looking to refurbish the hotel or grow your hotel business, then effectively the bank would usually lend you money on the basis that they can take security over the land and the building on which your hotel is. So if you have a real estate asset, then the bank is keen to lend you money because they can mortgage over it. And also they have a charge over the receivables, or basically they have a right on the receivables that you get in terms of that business. So that's kind of what I call the security package. When I'm borrowing money, I want to know what is the bank actually asking from me and what is my risk and how do I mitigate that risk. So if something does go wrong in my business, or if I'm not able to repay the bank in time, what is it? What am I out on a limb for effectively? And that's really it. So the security package is something you need to focus on. Obviously, it differs from asset to asset, business to business, region to region, and bank to bank, because one bank may look at certain anomalous forms of security. Again, in this region, personal guarantees are quite common. Until recently, banks were asking for effectively undated but signed checks of pretty large amounts as an anomalous form of security. So it's important to think it through. I mean, is the risk worth it? Can I get the money from elsewhere? Can I raise it by way of a safe agreement or a KISS agreement or friends and family giving me money over, say, a convertible note? Or do I really need to go out to a financial institution? Growing pains. That's what it's all about.